Hello and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Provider Relief Fund Audits for Commercial Organizations. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, and now I would like to introduce today's presenters, Aparna Venkateswaran and Matthew Dinsdale, both senior managers here at Moss Adams. Their bios and contact information are located in your webcast console if you would like more details. And with that, Aparna, I'm going to turn it over to you.
All right, thank you, Amy. Welcome, everybody. Thank you for joining us today. For those of you that have joined us in the past, we've certainly been talking a lot about the Provider Relief Fund and really more on the reporting side and, kind of what to be prepared for there. Today's session is going to be focused more on the audit options, and there is actually a question already in the Q&A that I figured I would address right away. Is the bulk of today's content is geared towards the for-profit organizations. So HHS uses the term commercial to kind of signify for-profit organizations because there is, in addition to the single and program-specific audit options, there is a financial audit of the award option that they are offering. However, that said, for those of you attending today that are nonprofit or government organizations, there is also information we're going to cover that would apply for the single audit or a program-specific audit if that is essentially the options you're looking at. One of the things we've discovered as the Provider Relief Fund was initially funded into the community since 2020 onwards, there's a lot of providers that have not really had to deal with any kind of federal funding and what the kind of the audit options entail. So there's, I think, something to be hopefully taken away for all the different types of attendees that are attending today. All right, so with that, we'll dive into our agenda. So we're going to go over the audit options, go over in more detail then on those types of audit options. So there's the single audit, a program-specific audit, and as I mentioned earlier, for the for-profit entities or commercial entities, a financial audit of the Provider Relief Fund or HHS awards in case providers got more funding in addition to the Provider Relief Fund, and we'll cover what those might be in subsequent slides. And then after that, we will kind of walk through some best practices that we think would benefit you in preparing for these audits, especially if it is your first time that you may be going through such an experience. As always, everything we're talking about here is based on kind of the most recent information we have available. There's always continuous updates to the FAQs. Even with the audit guidance, what we have, there's kind of continuous revisions contemplated that we may not be aware of right at this point in time. So, everything we're talking about is just based on what we know as of right now. Again, continue to monitor the deadlines. I know the period 2 reporting for PRF is open through the end of this month, and so I'm sure a lot of you are either done or working on completing that. And then just continuing to have that communication system in place across the organization, as well as, documenting everything. And really in the context of the audit options we're going to talk about, it really is critical to have, kind of as thorough documentation as possible. And we'll go through, again, some more specifics around that later in the slides. All right, we're going to kick it off with our first poll. Amy, if you'd like to run through this.
All right, thank you, Aparna. So our first polling question is to get a feel for our audience today. And it is, what entity type do you represent? A, provider clinic, B, hospital, C, tribal health, D, skilled nursing facility or long-term care, E, other healthcare provider, or F, other non-healthcare provider. And to respond, please click the button next to the answer you choose on the slide and then hit submit. And if you can't see the submit button, you will need to just enlarge the slide area. And it looks like most have had a chance to respond. We'll leave it up for another 5 seconds.
I do see some folks entering letters in the Q&A. As Amy mentioned, you have to actually click the button and hit submit to get credit. Putting it in the Q&A will not give you the CPE credit, so just something to be aware of.
All right, thank you. And here are the results.
All right, thanks, Amy. So it looks like we have a little bit of representation from a little bit of all sectors of healthcare, so that's good to know. Okay, so we're going to start off with the audit options overview and then start diving into the more specifics per the agenda. So one thing I guess I want to highlight here, so that the title of the presentation is, the Provider Relief Fund Audit. However, the audit options we're talking about really do cover all of the HHS awards. The reason we kind of went with the title having specifically Provider Relief Fund, and the bulk of the focus is on the Provider Relief Fund for today's session, is because really we're seeing for a lot of the providers that I mentioned that maybe have never had to have a single audit or they've received any kind of federal funding before, we're seeing generally that the Provider Relief Fund may be the only source of funding, or it's certainly the largest source of funding. So while we're focused in on, the Provider Relief Fund more specifically, everything we're going to talk about will also apply to any other HHS awards that you may have received under COVID-19. And we'll, again, talk about what some of those might be. So in terms of the options, again, just a brief repeat of what I mentioned earlier, the requirements are, so if an organization, generally speaking, the way the single audit requirements work is in a given fiscal year, whether that's a calendar year end or a fiscal year end, if an organization received and expended $750,000 or more, then they are generally considered to need a single audit or a program-specific audit. Now, we'll talk about the difference between what a single audit is and a program-specific audit is. And then, as I mentioned, for the for-profit or commercial entities, there's also this option of a financial audit in accordance with generally accepted government auditing standards. Now, the one thing, of course, with Provider Relief Fund, because this program has certainly been unique, is that general rule of thumb of expending the funds in a given fiscal year does not apply because of how the guidance has evolved. So that's where some of the complexity comes in as far as, which year and which year an organization might have the audit requirement and how you determine whether you met that threshold. And we'll talk through that here in detail as well. So some of the grants we expect to see with the, whether it's the single audit or the for-profit audit requirement is going to be the Provider Relief Fund itself. And now with the American Rescue Plan that was enacted earlier this year, they've also added on the American Rescue Plan rural distribution to that same program. So some of you may have initially gotten Provider Relief Fund in earlier phases, and with this phase 4, you may have also received a rural distribution component that went along with the Provider Relief Fund. So both of those together are considered one program. For those of you that may have participated in the claims reimbursement for the uninsured, as well as any coverage assistance funds, that's another program. For that one, you may all be familiar with the recent news. That program has run out of money. So, there may not be future audit requirements that kick in for this, but for 2020, 2021, there could be the likelihood that your organization may have potentially qualified for an audit requirement, and we'll go over that later. And then the other program we're generally seeing that's kind of specific to COVID is also the testing and mitigation for rural health clinics. That for those of you that may be in rural parts of the country serving patients there, that's another program you would consider. And then the last one is more of a little bit of a catch-all. And again, this is going to be kind of non-COVID-19 specific grants that organizations may have received prior to COVID-19 or start of the pandemic or even now. And it generally could be kind of the National Institute of Health Research and Development grants or other HHS grants, like our community health centers that receive other HHS funding that's kind of ongoing and routine. So those are kind of the ones to watch out for in terms of what might potentially need to be considered when you're thinking about your audit requirement. All right, Matt, I'm going to turn it over to you to walk through the options.
All right, thanks, Aparna. So on the screen you see in front of you, we've set up a matrix here kind of to show you each audit option and some of the critical areas that differentiate between each one. And we'll go through in the next few slides a little more detail on each individual option, what it means to you as an auditee and what you can expect. But first, let's talk about the three of them compared to each other. So it's good to note the GAGAS financial audit is a new term and a new kind of audit area for a lot of folks. It is very unique to PRF specifically. One thing to note that the financial audit is a very broad term. When you think about a financial statement audit, which many of you undergo, that is a type of financial audit. So a financial audit just means a specific statement or set of statements is being audited under GAGAS rules, generally accepted government auditing standards. So the first option there, you'll see what we're actually auditing is a award or multiple awards in the HHS programs displayed in a specific schedule that's being audited. Under single audit, we're actually auditing a SEFA, a Schedule of Expenditures of Federal Awards, and there's either one or multiple HHS awards or programs actually being displayed and audited as subject to that specific audit option. The third one is a program-specific audit. That one is different from the other two in that there's only one HHS program subject to audit and scoped in as part of that option. The next line there is audit of entities' financial statements. So that's not required. There's no financial statement audit performed under the first and third option there. Only the single audit involves an audit of your financial statements and footnotes. The third line there talks about presentation of the HHS schedule. So the first and third one there is a specific schedule created specifically for this audit. So it'll differentiate a little between the program and the GAGAS financial statement or financial audit, but it essentially just displays the HHS programs or program subject to audit. And then the middle option there, single audit, is a schedule of expenditures of federal awards, which I'm sure a lot of you are familiar with or maybe have heard of. And this is a schedule that incorporates the entity, your organization as a whole. And it incorporates all federal awards, whether it's HHS or another federal agency, and those are all subject to audit under the single audit. Now, we'll go into more detail about maybe some will and will not be audited, but they are all incorporated into that single schedule and subject to audit. The next three lines just talk about our reporting, or your auditor's reporting under these different options. So the first one is auditor reporting on the schedule. They all render an opinion on a specific schedule. With a single audit, the auditors are rendering an opinion on the financial statements specifically, and then also in relation to opinion on the CFA, the Schedule of Expenditures of Federal Awards. I'll use CFA a lot. It's a lot easier than saying the whole terminology there. So the second to last line there talks about reporting on internal controls over financial reporting. And so it's important to know that we're talking about internal controls over financial reporting there. So that's controls you have in your normal business cycles. So a GAGAS financial statement audit, a single audit, and a program-specific audit all will have some reporting on this, and it's part of the audit in general. The auditor is required to consider those controls. And then, of course, the last one there is auditor opinion on compliance. So with the GAGAS financial audit, this is a kind of a big difference for this one, is that there's no actual opinion and no specific auditing of compliance requirements required under that option, which does reduce the complexity and time and cost of that audit in general, is the lack of an opinion rendered on your compliance. The other two options actually have an opinion rendered on compliance. So your single audit is rendered on the compliance related to the specific programs audited, as well as a program-specific audit. So that's a key difference there you'll want to remember. So then just a couple critical areas here to think about when you're looking at these three options and deciding which one you want to go through. The single audit and the program-specific audit, as I mentioned, the auditor is testing operating effectiveness of controls. And what that means is they're looking at your internal controls, evidence of those controls occurring, sign-offs, reconciliations, separation of duties. All these things are very important when undergoing a single audit or a program-specific audit, and specifically compliance. Now, the first option there, the financial audit, as I mentioned, there's no actual reporting on internal control over compliance. So it reduces the amount of internal control testing and ultimately the chance of a finding if those controls are not in place, or at least not documented. Another critical thing is where does this information go? So in all cases, your audit and the audit report is going to the HHS, right? For the single audit, this is shared more broadly. A single audit is required to be submitted to the data collection form, a federal system where anybody can go on and look up the name of an organization and look up the results of the last single audit, as well as the financial statements. So that's publicly available. Program-specific audit is not. So that middle option there, information becomes public. The other two, we don't know what HHS is going to do with it. They may accumulate information. We're not privy to that. So, but just be aware that all three documents are going to HHS. And also note the AICPA really worked to simplify and make the financial audit, that first column, available, as it does make it a lot easier for organizations and auditors to go through the audit process, because specifically there's no specific opinion on compliance and internal controls over compliance. All right.
Hey, Matt, I wanted to interject one thing quickly on the previous slide. So the single audit option, Matt, that you talked about, Generally, that's true of going through the Federal Audit Clearinghouse for the nonprofit and government organizations. The one thing HHS has clarified for specific to the PRF, because again, that's likely the first time some of the for-profit organizations are having to think about the audit options, is they're also expecting that the single audit, similar to the other two options, would be sent directly to HHS via kind of an email address they provided. However, the point remains that, Matt, you made of, all of this information is generally expected. It may become public in some way. It is the federal government. There's usually not a lot of information that's not publicly available. And so when you're picking it from one of these options, the single audit is really the most comprehensive, meaning it includes financial statements as well as the schedule of expenditures. And so generally speaking, all of that information may become public, which for a lot of our for-profit organizations, that's not something they're used to experiencing unless you work in the realm of SEC or other reasons where you might have financial statements made publicly available. Generally, that's not the case. So just wanted to point out that little nuance of the submission of the audit, but the concern still remains of how public some of this information might be once these audits are submitted.
Thanks, Aparna. Good point. So moving on, we're going to talk a little bit about single and program-specific audits, and then Aparna is going to talk more about the financial audit. All right. So what is a single audit? So as I mentioned earlier, it's an organization-wide financial statement audit and federal awards audit. So it incorporates all functions, all components of an organization. As a brief point on history, in the 80s, a single audit option, a single audit was created to reduce the amount the federal government needed to audit individual recipients of federal awards. And so they recognize that a lot of organizations are already receiving financial statement audits, and they thought it might be a good idea just to tack on a single audit onto that. So the single audit is really the financial statement audit and the compliance audit. It's not one and the same, but they are. It's a single option. It's a single audit. So that's important to note. So it's an audit of how an organization has managed federal funds to make sure it's in compliance with direct and material rules and regulations of selected grants. So it's important note there is selected grants. When an auditor starts a single audit, they do a risk assessment and they look at individual programs they're reporting on the CFA. And there's a formula and risk assessment process that determines which actual grant is going to be audited. And it generally cycles from year to year. You generally don't have the same program audited every year unless there's a single program that's very large or the federal government tells the auditor that the certain program's high risk and needs to be audited every year. So it's important to note that. It also includes consideration of internal controls over financial reporting and internal controls over compliance. So what that means is that the auditor will be looking at your internal controls over both areas. They are required to consider those controls. And specific to internal controls over compliance, they're required to test them to a certain level of assurance. What that means for you is that if you don't have controls adequately documented, and you'll notice a common thing here is we're going to keep saying the word documented. It's an important part of an audit. If it wasn't documented, it didn't happen. That's kind of a rule of thumb. So make sure you are documenting your controls. That means if somebody's reviewing something, there needs to be a clear trail, whether it's someone's signature or an email that's being filed away or electronic signature or something that supports the fact that there is a clear separation of duties, a review. Other controls may be relevant, and it needs to be auditable. So a single audit, at the end of the single audit reporting package, there's a schedule of findings and question costs, and you can kind of refer to it as a report card, and it's used by federal agencies to really assess the summarized audit, what opinion you got, if there's any significant deficiencies or material weaknesses, the programs that were audited, the threshold that was used to determine larger versus smaller programs. And it's really, I'm sorry, the important part also there is it also includes any kind of findings you may have. And so that's an important part of the single audit, is it summarizes all that, and it's looked at, kind of skipped to a lot of times, just to look at a summarized version of the single audit. There's also tools for federal agencies to address problems at the grantee level. So if you have subrecipients under your grant, or if you're a federal government and you have recipients of your grants, it's a monitoring tool, and it's used to determine if there's problems. You'll see findings, and also it's important to see how those findings resolve from year to year, because every year you're required to report on the previous year's findings and how they were resolved or not resolved. So the findings that you receive can follow you from year to year if they're not resolved. All right, a quick note on the scope of the single audit. It is conducted under U.S. Generally Accepted Auditing Standards and Government Auditing Standards. Government Auditing Standards is typically a little more strict in regards to independence and other matters than Generally Accepted Auditing Standards. And again, it covers the entire operations of the entity. And I think we've already kind of talked about areas where we render our opinions, so I won't go into too much of that more. So skip over to the next slide. So the schedule of expenditures and federal awards is the critical statement that's being audited, and is the basis for which to determine which programs are being audited for compliance and internal controls over compliance. So the CFA is a schedule that's prepared by management, which means it needs to be reconciled to accounting records. It needs to be reviewed. It needs to be, it's important as a balance sheet or income statement in regards to this single audit specifically. So think of it as your kind of critical schedule that's being submitted to the audit for the audit auditor for the audit procedures. So again, we use, or your auditor will use risk assessment and a methodology that's been determined by the federal government to select which major programs and the term major program, for those that aren't aware, just means that that's the program that was selected to be audited. So some things to think about: completeness and accuracy are critical to avoid missed programs. That's probably the most common error issue with a CFA, is leaving programs off. You really need to do an entity-wide check to make sure that any kind of smaller programs or programs maybe you weren't aware of that was a federally sourced program are included on that CFA. Sometimes programs may be passed through to other agencies or other entities and pass through to you, but if the main source, the top level source is the federal government, it belongs on that CFA. In most cases, there's some exceptions, such as the PPP loan wouldn't be included on the CFA. And so again, we, or your auditor will issue an opinion, in what we call an in relation to opinion on the CFA. What that means is we render it in relation to the financial statements as a whole. The CFA is materially correct. And of course, the auditor is responsible for determining whether auditing includes all requirements of a CFA. So there are specific criteria and specific items that need to be reported, such as the what we used to call the CFDA number. It's the number that is associated with that program. Now it's called the ALN, Assistance Listing Number, as well as the amount spent, the amount passed through, the grant number, things like that are all required to be reported there. All right, really
Matt,
quick, what is, yep.
Sorry, Matt, before we transition, so question came in around, if what we were just talking about with the CFA, if it's just federal, not state, and that's a good question, figured we'd talk through it live. So the schedule Matt just talked about is meant to capture federal expenditures. However, those federal expenditures could come directly from a federal agency, or they could be passed through a state or county or other type of organization. And so that's, I think, where Matt had referenced earlier. You kind of look to your grant agreements to see if ultimately you, the organization, has the requirement to comply with the single audit requirements That said, there could be some state grants that have nothing to do with federal funding that could have their own audit requirements. I've certainly seen grants come through state agencies that sometimes have a requirement to be audited under government auditing standards or other potential compliance. So it's, ultimately we're talking about federal funding, but it could be passed through or be direct. And then, you got to look to your state grant agreements if you're getting any to see if there's any kind of unique audit requirements you need to comply with.
All right. Thanks, Aparna. And a quick note on a program-specific audit. It is very similar to a single audit in that we are testing, your auditor is testing internal controls over compliance and compliance. The difference here is that you're engaging auditor to audit a very specific program. So in this case, a PRF program is being audited, and there's no kind of consideration of completeness of other programs, no incorporation of a financial statement on it. It's very specific to a specific program. Nonetheless, there is testing of compliance and testing of controls over compliance. And the program-specific audit is actually conducted in accordance with GAS and GAGAS as well as the single audit. It's important to note that compliance and controls for financial reporting and compliance are incorporated into this audit as well as the single audit. All right, and as a quick note, and this gives you a little more insight into the scope of a program-specific audit and a single audit, is that there are a number of potential compliance requirements that may need to be audited. Now I use may and could because individual programs, the federal government can and often do say there's specific areas here that are not applicable or we don't really care about in regards to a compliance audit, so you can ignore them. And then others we may get into the detail and find out it's not really material to the program itself. I've bolded the areas that are audited as part of the PRF program. So allowable activities, making sure that the activities you're performing under this program specifically are allowable. Costs and cost principles, those have to be allowable as well. Reporting is completed on time and within the specified criteria. And then other special tests and provisions are required to be audited. So this is kind of for PRF, but in general, any kind of single audit program audit, all these are potentially could be audited as part of any program. And so just it's important to note that as compared to a financial audit that Aparna is going to talk about, this does not come into play. All right, I think we have a poll here.
All right, so our second polling question is, has your organization previously been through any of the following audits? A, financial statement audit, B, financial statement and single audit, C, financial statement and program specific audit, D, an engagement review engagement, or E, never been audited or reviewed. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions that we pull up. Everyone was pretty quick on this one, so here are the results.
All right, thanks, Amy. So it looks like we have quite a few attendees that are very familiar with the single audit component and certainly with the financial statement audit, so that's helpful to know. One quick thing also, another question that came in that I think is a good one is somebody asked, can you have separate program-specific audits, or are you automatically required to have a single audit if you have more than one grant? And so the general rule of thumb is for a program-specific audit, and Matt covered this in the previous slide, is, it's generally meant for if you have funding from one program. And that way, that's the only program. If you meet the threshold, which again, the threshold is in a given fiscal year, you spent $750,000 or more in federal funds. And so you hit that threshold, and that's when the audit requirement kicks in. Could an organization that has multiple grants have program-specific audits. You could, but that would mean you'd have multiple program-specific audits because the expectation is you're getting coverage for the organization as a whole from a financial reporting perspective. So, if there's a kind of a consolidated organization or an organization with multiple grants, you may need a program-specific audit on each of those grants if that meets the threshold. The benefit of a single audit is it's all the funds are pooled together, and potentially one or two of those programs are considered major. And Matt talked about there's a specific kind of formula and risk assessment process that the auditor goes through. So it's a way to save some effort and time, both on your part as an auditee as well as for the auditors, if you were to pick a single audit over a program-specific audit. But certainly there's a judgment call that can be made on the level of effort and time and cost that could get incurred for those options. Matt, anything you'd add there?
No, I think you hit the nail around the head. So thank you.
All right. Okay, so now we're going to dive into that financial audit of the provider relief funds under government auditing standards. And again, I acknowledge that the financial audit option is for HHS awards in general, but we're really just going to be spending a lot of our time focused on how it impacts the provider relief funds. So one thing to start off with, and I have a visual, the ASCPA, the Government Audit Quality Center, has issued a practice aid for the auditors that kind of has some example reports, example schedules that I have a snapshot of that I can show you here in a minute of what it'll look like. And there's some questions that have come in around timing of when the funds were received versus timing of when the audit requirement kicks in. So we'll cover all of that here in a minute too. But in terms of starting off, the basis of accounting for that schedule. So there's really two options, GAAP, which I think most of us are used to. You prepare GAAP financial statements, and then a special purpose framework. And generally, we're expecting that the special purpose framework is going to be like an income tax basis or a cash basis. Now, the one thing that's still up for judgment, and it's something you should be discussing with your auditors as you're preparing for these audits, is there is no requirement that this schedule has to be GAAP versus one or the other. So, what's going to make the most sense for the organization? That's something to keep in mind. For me as an auditor, my default certainly tends to be GAAP because that's kind of the world I live in. But the good news here is there is no specific requirement that you have to have a GAAP schedule if a special purpose framework kind of makes more sense given the unique circumstances. That's something to kind of talk through with your auditors. And so, what's going to be included in the schedule, right? And the general idea is it's going to be a revenues-based schedule, meaning it'll follow the revenues you've already recognized under the Provider Relief Fund and other programs. And so for, Provider Relief Funds, that's a combination of the expenditures and lost revenues you've reported. And it's going to be based on the period 1 and period 2 reporting that you've done. And I'll go through again which year ends, what periods you have to pick up here in a minute. If you got anything from the uninsured program and the Coverage Assistance Fund, then that's really kind of a fee-for-service revenue, basically revenue you recognized. So we're talking about a calendar 21 year end, whatever revenue you may have recognized under that program is what you would be picking up as part of the schedule here. And any other HHS programs, it's really going to be the expenditures that you incurred of those funds, which is again the practice we're used to seeing. Those of us that are used to single audits, but the other two programs is a little bit unique, and we're looking at actual revenues versus expenditures. Okay, so this slide should be familiar to everybody that's gone through period 1 and period 2 reporting, and there have been questions that come in like, how do I know I have an audit requirement? There's, we got money in 2020, but we're talking about an audit in 21. And so the way we want to look at this is that for the period of availability, the end date of that, where does that fall within your fiscal year? So June 30, 21 year ends were the first year ends where the PRF officially became a program that was subject to the audit requirements. And so if you're falling under a single audit or a program-specific audit option, as a nonprofit or government agency, your CFA would include the monies you reported on in period one. So say you demonstrated through the portal, you spent $1 million of PRF, you received and spent $1 million, that is what would go on your CFA. For those of you that may be a non-calendar year into the for-profit organization, same thing would apply. If between the combination of lost revenues and expenditures, you demonstrated you spent $1 million in period one, that is what goes on your schedule. For 12/31/21 year ends, the period one and period two deadlines, meaning June 30, 21 and December 31, 21 fall within that calendar year. So either the CFA or the schedule would include the monies you've reported on during period one and period two. And say it was $1 million in each period, then your CFA would show $2 million, or the schedule would show the $2 million, but just shown a little bit differently than a CFA. The way, so this, of course, is not, it's a little bit confusing because it's kind of grabbing expenses and lost revenues from multiple fiscal years, but being kind of put into one specific year to report on, even though there's, activities from prior years that's going into that number. But this is kind of where the HHS landed, especially when they came up with this notion of we have these periods we have to report on, and they're breaking it down into the specifics. And so the ASCPA has kind of given us auditors some guidance on how we can still opine on these reports, the different options we talked about. But general rule of thumb is if you're kind of the year-end examples I walked through, whatever you've demonstrated in the portal you've spent of PRF for those two periods is what's going to go on your schedule. And so this is just another view of what I was just talking about, where anything prior to June 30, 21, PRF should not have been on any schedule or CFA to be audited. But then for period one and period two, this is really, it's just what I just talked about, where you would capture either period one only if you're a June 30 or 9/30 year end, and then 12/31 year end, you would have period one and period two. Okay. So this is the snapshot I was talking about from the practice aid that the ASCPA has released. So this is specific to the financial audit option for the for-profit entities. It's a very, I'm going to just call it, it's a very strange schedule, and it's not something we've ever really had to deal with in the accounting profession, whether you're on the provider side or, auditor side. But this is just an example of a way to try and map payments back to the revenues recognized, because I mentioned that this is a schedule that's based on revenues. And so in this particular case, in this example, so, first up, this is a GAAP-based example, meaning the numbers in here are GAAP. If you were to have a special purpose framework instead, which is tax or income tax or cash basis, then the headings would reflect that. The other thing that's a little bit unique about this is the title of the schedule is going to be kind of whatever line items these funds are coming from. Meaning, generally we've seen the Provider Relief Fund has been recognized as grant income or other income. The claims reimbursement for the uninsured and coverage assistance fund, that's generally been part of net patient service revenue. And if there was any other funding, that may be part of grant revenue. So you kind of are calling out the specific line items on your financial statements where these numbers are coming from. The other thing that's also different about this, and this is again meant to address the fact that there's kind of numbers coming from multiple fiscal years. This is kind of the attempt to figure out, how to map it back to, we received and recognized revenue for funds in 2020, and so this kind of $2 million in the 2020 column is meant to map back to that, and then the 21 column is kind of meant to map back to, in our financial statements, we recognize this much as revenue in that year. Now, how you determine whether you have an audit requirement or not is the total of these columns. So you're not going to display a total in the schedule, but you would total up the columns to determine, do you have an audit requirement? And again, it's for Provider Relief Fund, given the unique challenges of the period reporting, is if in period one for the fiscal year ends, you demonstrated you spent $750,000 or more, you would have an audit requirement. For that June 30, 21, 9/30, 21 year end. For 12/31/21, if between period 1 and period 2 together, or if you only had to report in one of the two periods, whichever the case may be, if in the aggregate you demonstrated you spent $750,000 or more of PRF money, that's before considering any other grants, right? But if all the grants together, you ended up meeting that $750,000 or more threshold, then you would have the audit requirement kick in. All right, and so in addition to the schedule, similar to financial statements, there's going to be notes that have to be added to help describe the schedule and give a user some clarity on what's going into the schedule. And so some of the things we're expecting to see are, some of it's very consistent with what you would see in a set of financial statements, you know, the type of entity, kind of the different funding that was received, if there was more than provider relief fund in the schedule. The basis of presentation, meaning, you know, if it's a consolidated organization, there's parents and subsidiaries, then, you know, all of those kind of organizations, and more specifically the tax ID numbers, because that is something you're required to include in the reporting. So this is a way to map back to the reporting that you've done. Any estimates? I know somebody had asked a question previously around, you know, if we've allocated costs, how do we kind of document and assess that? So that might be part of an estimate that was made potentially that was included in the schedule. And then any subsequent events, you know, if there's been any kind of merger or acquisition activity or anything else that might be considered relevant to the schedule, you would include that there between the accounting policies and the other category. And so in terms of the audit submission deadline, I'll start with the 12/31, September 30 and 12/31 year ends. The general rule of thumb, the normal process, I'll call it, is that the audits are due the earlier of 30 days, 30 calendar days after receipt of the audit report, or 9 months after the fiscal year ends. So for the 12/31 year ends, the audits are due no later than September 30th, 22. Now, for the June 30, 21 and before organizations, those year ends, there was an additional 6 months provided kind of beyond the norm period. So for a June 30, 21 year end, the original deadline would have been March 31, 22, but because of that 6 month extension, it's now September 30th, 22. One thing I want to make sure I point out clearly here is that extension kind of, it's only for 6/30/21 year ends and prior. Any year ends after that, there is no, we are not expecting to hear that there will be an extension granted. I think the normal deadlines are expected to apply. So something to keep in mind as you're working towards getting ready for the audits. Okay, and now we have the next poll coming up, Amy.
All right, thank you. So the third polling question is, do you feel you understand what a single program-specific audit or financial audit would entail? A, very comfortable. B, we're working on it. C, we're not feeling comfortable yet. Or D, not applicable.
Aparna, we got a really good question here. Do you feel any testing of compliance is needed under the financial audit option, even though an option is not, even though an opinion on compliance is not being expressed?
Yes, that is a great question. So yes, there would still need to be consideration of compliance under the financial audit option. Now, as Matt had explained earlier, you know, there is a difference maybe in the level of testing and level of detail we would go to under a single or program-specific audit versus the financial audit. But under a financial audit or even a financial statement audit, you know, one of the things we are required to do under the auditing standards is to assess compliance with laws and regulations. And the government auditing standards report, even though we don't issue an opinion on that, we are also required to assess any compliance with contracts, laws, and regulations. So while the scope of what we do might be a little bit less under the financial audit, we are still going to be looking for compliance around the expenditures that were included, as well as the kind of the methodologies for lost revenues, because that's kind of a key part of demonstrating that an organization has earned and can retain the provider relief fund money.
All right, and here are the results the polling question.
All right, thank you. Awesome. Sounds like looks like a lot of you are already on it, which is great news. So we'll, hopefully see that continue to trend upward as we go along here. So now we're just diving into, we have the last kind of 10 minutes or so, dive into just some of the best practices on how to prepare for the audit. So I think, Matt, I'll turn that over to you to start with.
All right.
I'm sorry, this is what I was going to talk about, right? Or...
No, I can talk about it.
Perfect.
We've kind of summarized here the areas of testing. So allowable costs and activities, as I mentioned earlier, is a critical area. Generally, you look at general targeted distributions, skilled nursing, infection control distributions. Expenses under this program must be used to prevent, prepare for, and respond to the coronavirus. It's not like the PPP or other programs that may have a broader scope of what can be covered under the funds. It must be used in accordance with those rules and regulations. And as part of the audit, the auditor will be checking that. The second bullet point there says not reimbursed from other sources. This is a very critical point and a hot topic for discussion in the past couple of years. And that's just really doubling up on claims. So you don't want to claim costs that were claimed under other programs, commonly referred to as double dipping. You want to make sure that one cost, one invoice, or $1, I should say, is covered under one program or another, but not covered under two. And then specific allowable expenses identified for skilled nursing, infection control distributions. Anything else you wanted to add to that, Aparna?
Yeah, and here really this is not news to any of you that have already gone through kind of the first two rounds of reporting or working through getting through first two rounds of reporting. But from an audit perspective, it's how can you document that you have complied with these requirements, right? And so the requirements being they are, used to prevent, prepare for, and respond to coronavirus. For those that got a skilled nursing infection control distribution, there are very specific allowable expenses that are a little bit more streamlined than just the regular provider relief fund. And so, there was a question earlier about, if we've allocated costs, how can we demonstrate those are eligible? And that's where it becomes key that your documentation is as clear and as detailed as possible. If there were, anything that's direct, as long as you can demonstrate, that you've not had it reimbursed from other sources. Because again, as a reminder, Provider Relief Fund is meant to be the payer of last resort. So if you've had any other funding, maybe FEMA or other grants, whatever it may be, even the PPP, even though that's not subject to single audit, if there was payroll costs reimbursed by that, those are not costs you could have applied under PRF. So, if you have, something I would recommend is some kind of a narrative format to really identify the methodology that you went through to identify these costs and how you determined they are eligible. And so when we're doing the audit, we can kind of start with the source transaction itself. Okay, what's the nature of that expense? And then hopefully follow your documentation to understand how you concluded it's eligible to be reported and applied against the Provider Relief Fund. I think, Matt, that's all I had.
Okay, perfect. Thank you. All right. So the next area, I think, Aparna, you're going to talk a little bit about different areas of testing.
Yes. So there's specific areas that, HHS wants us to tie out. And this is, all of this we've talked about in the previous slide and this slide here are coming from the compliance supplement. And that's available on the Office of Management and Budget's website. And so these are kind of the, for a program specific or single audit, these are the items we need to test. And so tying out kind of the information back to supporting documentation. But under the financial audit option, we likely would do, again, it goes back to what I just talked about where we're kind of assessing that material compliance with laws and regulations under kind of the auditing standards. And so we would still likely need to be tying out some of this information back to the reporting. And with the, the revenues, again, depending on which option was selected option 1, 2, or 3, tying all of that back. And for those that may have ended up in option 3, making sure that the narrative that was uploaded along with the revenues or the lost revenues that were reported in that option, they all kind of make sense, meaning it's consistent with what the narrative is that documents your methodology that you used. And again, we'll talk about this in I think a couple slides, but it's, for those of you that have never gone through an audit or have, have maybe had a review done instead of an audit, it's really the completeness and accuracy of the information that you're pulling together and using as a basis to start your reporting. It's going to be important that you're able to kind of document that so that auditors can come in and follow that trail and conclude that, everything you're picking up is complete and accurate, is eligible based on the terms and conditions of the program, and also kind of the other FAQs that HHS has released. All right. So if we move on, oops, I went too far. Okay.
All right. So in regards to how you can prepare for the audit, it's important that you look at your expenditures, your direct costs and indirect cost allocations that Aparna mentioned, and you can tie what you reported in the portal, what's reported on the audited schedule, back to really the source documentation, so your invoices, your indirect cost allocations. There has to be a clear, what we call an audit trail. Now, there can be reconciling items, there can be things that weren't claimed but were incurred, and vice versa. As part of this process, maybe some things weren't allowable under the terms of the grant. So that's fine. It just needs to be clearly documented, and there needs to be a reconciliation and a clear trail between these items. And Aparna, would you mind talking a little bit about revenues and specifically the second part of that slide?
Yes, absolutely. So as you're probably already familiar, there were some kind of nuances to what HHS was calling patient care revenues under Provider Relief Fund as far as what would be considered eligible patient care revenues. And so just again, did you pull out any pieces that may otherwise have been classified as part of net patient service revenue on your financial statements that maybe didn't qualify, and making sure those are pulled out. And again, the option 3 that I talked about that briefly earlier is kind of how thorough is your documentation around the option that you used. I think that was it, Matt.
Yes.
All right. So in terms of the compliance considerations, and again, this discussion could apply whether it's a single audit, program-specific audit, or the financial audit. But this is where kind of the documentation is going to be key. And if we're talking specifically about the financial audit, these are some of the things we have to be able to audit to get comfortable kind of with that compliance with laws and contracts and laws and regulations is, just how you prepared the schedule, kind of how you identified those eligible expenditures and lost revenues, and how you've kind of complied with some of the other terms and conditions that were, under PRF and some of the other programs that you may have had. The other thing that might be new to some of you is findings. So, in the past, if you've gotten a financial statement audit and no other type of audit, like a single audit or program-specific audit, if there have been any significant deficiencies or material weaknesses identified by our auditor, those are issued as a separate communication that kind of the management and the board have discretion over who should be reviewing that. In this circumstance, this now becomes part of the reporting package, which is sent to HHS. So if there's a significant deficiency in financial reporting or just the kind of material compliance with laws and regulations component, if there's any kind of a finding there, then those are considered, they have to be reported as part of the package. And then the next slide here, I believe we have kind of a list of what these findings, the elements of the findings would be. And it's sort of walking through like what was the specific requirement, kind of what caused the finding to start with, and then what, if there's any question costs, meaning if there's costs that were not considered eligible, then those would get included here. And then just really what was the ultimate kind of context for the finding, what effect did it have, and, recommendation. So there's some things just to keep in mind that you'd want to talk through with your auditors. Okay, and I know we're short on time, so I'm going to get us to the next poll here. Amy?
All right, thank you. So the last polling question, in what area do you feel the least comfortable? You have several options listed below. Let us know where you feel the least comfortable or not applicable. And while you're responding, since we're a little short on time, if you would like a copy of today's slides, you can download them from the folder that says slide deck and handouts. We will also be sending them via email tomorrow along with the recording of the webcast. And then also, once you've completed all CPE requirements, you will be able to download a PDF of your certificate from the CPE progress window. All right. Here
and
are
I don't recall if we mentioned this. Sorry, and I was just starting to say, before we jump into the poll results real quick, we did not get to everybody's questions, we acknowledge, so we'll certainly follow up afterwards with you to hopefully get you the information you need. And it looks like there's kind of a mixed bag of issues that folks are dealing with. So totally not surprised by these. You know, if Matt and I can help in any way, our contact information is available in the slide deck, and so we'd be happy to talk through any questions you have. All right, really quickly, just very quickly, again, we've been talking about this the whole time, but just continue to watch for kind of the guidance to be updated. You know, retain everything that you can. There was a question around, you know, retaining what was uploaded to the portal. Definitely recommend screenshots as you go, and then final screenshots of kind of that last page before you hit submit. And then the documentation around the controls that I talked about earlier. All right, I think with that, we are done. So thank you, everybody, for your time today.
All right, thank you, everyone. And I will put up a link to the survey if you would like to provide feedback for today's presentation. Take care.